Investors begged Bernie Madoff to take their money. Some waited years just to get into his fund. Yet, there was no fun, no trades, no investments, just a spreadsheet of lies that fooled billionaires, charities, and even his own family for decades. Before we dive in, drop a comment and let us know where you're watching from. We'd love to hear from you. If you enjoy true crime stories like this, be sure to like the video, subscribe, turn on the notification bell, and share it with someone who'd love it too. Bernie Madoff wasn't just a con artist. He was a Wall Street legend, chairman of NASDAQ, pioneer of electronic trading, a man so respected that getting into his investment fund felt like joining an exclusive club. The returns? Steady, consistent, 10 to 12% annually, whether the market was soaring or crashing. But here's what nobody knew. Those statements were fiction. Every single trade, fabricated. Every profit, imaginary. The entire operation ran on one principle. Use new investor money to pay old investors. A Ponzi scheme so massive, it would dwarf every fraud in history. And Bernie pulled it off for over 20 years. Think about that. 20 years of lying. Every day, every handshake, every family dinner. How? First, exclusivity. Madoff didn't chase clients. He rejected them. You couldn't just walk in with a check. You needed connections, a referral. This scarcity made people desperate to get in. The harder it was to invest, the more legitimate it seemed. Second, trust. Bernie didn't look like a criminal. He was charming, philanthropic. He sat on the board that regulated Wall Street. Who would suspect the fox guarding the henhouse? Third, the split strike conversion strategy. That's what Bernie claimed he used. A complex option strategy that sounded sophisticated enough to justify consistent returns. Most investors didn't understand it. They just knew it worked, or seemed to. But red flags were everywhere. Financial analyst Harry Markopolos warned the SEC 5 times starting in 1999. He mathematically proved Madoff's returns were impossible. The SEC investigated and found nothing. Why? Bernie's reputation was bulletproof. His brother was a prominent figure at his firm. His sons ran a legitimate trading desk on a different floor. The whole operation looked real. Some investors questioned the consistent returns. How do you never have a down month, they'd ask? Bernie had an answer for everything. He'd get slightly annoyed, make them feel stupid for asking, then dazzle them with technical jargon. Most people stopped asking. The strategy was psychological genius. Make exclusivity the product. Make questioning him feel like doubting yourself. And it worked for decades. Madoff claimed the fraud started in the early 1990s during a recession. His legitimate business was struggling. Clients expected returns. So he made one decision, just this once, fake the numbers. He'd make it back when the market recovered, except he never did. That one decision became 2, then 10, then thousands. The lie compounded. Each year, he needed more new money to pay existing clients. The scheme required constant growth. Stopping meant exposure. So he kept going. Here's the chilling part. His family worked in the building, his brother Peter, his sons Mark and Andrew. They ran the legitimate trading operation upstairs while Bernie orchestrated the fraud on the 17th floor. He kept them completely separated. They had no idea, or did they? That question haunted the family. Mark Madoff killed himself exactly 2 years after his father's arrest. Andrew died of cancer in 2014, insisting until the end he knew nothing. Bernie carried the weight of the lie alone. Every day, every conversation, every family dinner. He was simultaneously a loving father and grandfather, and a man destroying thousands of lives, including his own families. Then came 2008. The financial crisis hit like a tsunami. Investors everywhere panicked. They needed cash, real, liquid cash, and they started pulling money from Madoff's fund. In a real fund, this would be manageable. Sell some positions, return capital. But Bernie had no positions to sell, No actual investments, just a growing stack of withdrawal requests he couldn't fulfill. By November 2008, clients were pulling out $7 billion. Bernie had maybe $300 million in the bank. The math was impossible. Here's where Bernie made his fatal mistake. He could have disappeared, taken whatever money remained and fled to a country without extradition. But he didn't. On December 10th, 2008, Bernie called his sons into his apartment. His brother Peter was there too, and Bernie said the words that ended everything. "There is no innocent explanation," he confessed. Told them the entire operation was one big lie, that he was finished. His sons didn't hesitate. They called a lawyer. The lawyer called the FBI. By the next morning, federal agents were at Bernie's door. Why did he confess? Some say guilt. Others say he knew he couldn't run. $65 billion evaporated, the biggest fraud in financial history. But it wasn't just rich people who lost money. Charities collapsed. The Elie Wiesel Foundation lost everything. Retirees who trusted Bernie with their life savings lost it all. Some victims killed themselves. Bernie's family was destroyed. His son Mark hanged himself. His son Andrew refused to speak to him and died believing his father had ruined their name forever. His brother Peter went to prison. Ruth lost everything: her homes, her money, her reputation. And Bernie? He pleaded guilty to 11 federal felonies. In June 2009, the judge sentenced him to 150 years in prison, the maximum possible. Bernie was 71. He died in prison in April 2021, age 82. But here's what haunts people. A trustee named Irving Picard has recovered about $14 billion for victims. That means $14 billion existed somewhere, in accounts, in assets, hidden in the maze of Bernie's empire. Some early investors actually profited. They withdrew more than they invested. Legally, they had to return it. Imagine getting a letter saying the retirement money you withdrew 10 years ago was stolen, and now you owe it back. Bernie Madoff didn't just run a Ponzi scheme. He ran a psychological operation that weaponized trust, exclusivity, and reputation. He proved that in finance, belief is worth more than reality, until reality comes calling, and when it does, the bill is always higher than anyone imagined. The man who everyone begged to take their money died alone in a prison cell. His family destroyed, his legacy reduced to a single word: fraud. If this story opened your eyes to how corporate fraud actually works, you need to hear about Theranos. Another billion-dollar company, another charismatic leader, another web of lies that fooled investors, celebrities, and even the government. That story is even more unbelievable than this one. And if you want to see how these patterns keep repeating throughout history, hit that subscribe button. We break down the biggest scams, frauds, and collapses that shape the world we live in today. New stories every week. Thanks for watching. I'll see you in the next one.